we'll get it started. Firstly, thanks for coming. Today we're here to do the Stable Show. We're going to be talking about the implications, the benefits, and the sustainability aspect of stablecoins and how they affect the greater crypto ecosystem. We've got Julien from Curve and Stake DAO. We've got Jeff from Terra. We've got the Pablo couch over here with Pablo Squared. We've got Pablo from Angle and Pablo from QiDAO. Guys, if you want to talk about Curve, we'll start with a quick intro on what you guys are doing, the stablecoin strategy, what you guys envision about stablecoins, the benefits, and we'll work our way down, and then you can talk about Terra and yourselves as well.
Yeah, so my name is Julien Bouteloup, and Curve is the biggest auto market maker for stablecoins. Yeah, the original idea was to build an auto market maker that just focus on stablecoins and provide the best way to swap those assets, kind of like a FX mechanism. And we were one of the first projects to go cross chains or cross layers, and that's what we've been doing so far, incentivizing the deployment on multiple different ecosystems. Trying to have much of the liquidity across different blockchains.
Jeff?
Yeah, hey guys, my name is Jeff. I work for Terra. Terra is building decentralized stablecoins. I guess the reason why we're doing this is because we believe that DeFi needs decentralized stablecoins and decentralized primitives to be successful. And so, we like the Curve team, we also share the vision of kind of the multi-chain world. And so Curve is actually, one of our biggest partners, and our communities work closely together to make sure that there's, sufficient UST liquidity across a number of different chains.
So I'm Pablo. I work for Angle. The vision as well is to build decentralized stablecoins. We focus on the non-USD money layer of DeFi because we have some friends who do it pretty well. And we have started with a Euro stablecoin that we're starting to grow, mostly on Ethereum. Vision is cross-chain as well. And we'll soon launch other decentralized stablecoins as well.
Is it doing really well, by the way?
Sorry?
Euro is doing
Euro
really well.
no, there are other Euro stablecoins in the market. Our stablecoin AG Euro, it used to be the biggest Euro stablecoin, but now it's the biggest decentralized Euro stablecoin.
Yeah, amazing. Pablo, that's
awesome. I'm Pablo. I work at QiDAO protocol, and we run a USD stablecoin very similar to Liquidity and MakerDAO, but very multi-chain. You can mint it on 8 chains so far, and it's available on 18. So very multi-chain, and we really resonate with the idea of just having the same asset being cross-chain and usable everywhere.
Amazing. So we've seen a few failures with stablecoins. I'm sure everyone saw like the rise of elastic stablecoins. A lot of them have come and gone since then. The people on here are pretty much doing something that's highly sustainable. So how do you guys approach sustainability? Because personally, I think that's the biggest issue with the stablecoin space. Curve?
Go for it.
Jeff,
I'm an auto market maker. They build stablecoins.
Sure. So I think there's like 2 ways that we think about stablecoins and sustainability. I think the first is not only does the design and the tech have to be sound, but I think there also needs to be like utility around the stablecoins and a reason for people to hold it, right? And so we built Terra stablecoins with that in mind. There's a number of pretty interesting applications and kind of payments use cases for Terra stablecoins in different countries around the world. And one of the things that we focus a lot on is incentivizing and getting builders to build kind of interesting applications that connect DeFi and our Terra stablecoins with the real world. I think that's like a very important piece of stablecoins, and I think for a stablecoin to be successful, it needs to have utility not just within DeFi, but also outside of that. The second piece that's important is the actual tech and how the mechanism works. For Terra, we started off as an algorithmic stablecoin where a dollar's worth of Luna can be minted. Or can be burned to mint $1 worth of UST and vice versa, and that's kind of the mechanism. As I'm sure most of you have seen over the last week, we've also started, our foundation has started to acquire large amounts of Bitcoin as a form of exogenous collateral for Terra UST. And the thinking there is, over time, for the stablecoin to be successful and stable, that it probably makes sense to have kind of a basket of exogenous collateral made up of kind of high quality assets from both within crypto and potentially not crypto as part of the reserves. And so that's the direction that we're currently moving in.
Yep. Guys?
In terms of sustainability, there is a point that was not mentioned. It's also the regulatory aspect. Like the battle for stablecoins is fierce. It's something that worries states. They feel that they are losing some of their power, like the power of central banks to issue a currency. And so besides the battle for utility, for real life utility, the battle for having a protocol that is robust and that can sustainably maintain peg, there is a whole part of stablecoins, which is about how to make sure that we're still here in 20 years and that we won't have been shut down.
Absolutely.
One of the important aspects, and here we mostly represent decentralized project, is decentralization. If you are decentralized, you are less subject to being cut off by the state. But it's also important to keep a discussion with the regulators so that they understand that, I mean, on our side, I'm speaking from the Angle perspective, that we are not against governments. What we're doing with Angle and with AG Euro, we are trying to give more power to the Europe through AG Euro, so that everything is not denominated in USD. And in the end, what we're doing is it's to support the European governments. So this is for the Angle thing, and that is to say that regulatory aspect matter, and that regulations have not been decided yet. I don't know if you have.
Oh, there's two fun things there. I mean, from sustainability and starting your stablecoin, it's a little hard at the beginning because you start. Is there liquidity? If someone borrows against your stablecoin, which in our case is a CDP based, so most people will be taking ETH, locking it, borrowing the stable, minting it, and selling it because they want to move it to USDC, to Coinbase, etc. Which means there's selling pressure. So having the liquidity mining rewards kickstart around the same time helps us balance it out and slowly grow the market. And that's how we maintain the sustainability of our token, by controlling what assets do we grow, what assets do we not grow for a certain market condition. So if the market's going down, people are not going to be borrowing crypto. If market's going up, people borrow crypto. So we can balance that out through a multi-sig of, different multi-sigs on different chains. And then from a regulator point of view, decentralization is a must, but also we're trying not to play the same cards that they're playing. So if regulators are really cracking down against banks or USD-backed stablecoins, we try not to deal too much in that aspect. So we're not necessarily issuing a stablecoin. The users are directly through a self-serve system. So by doing that, we're able to at least stay clear of the law and not raise any red flags.
Awesome. You touched on something amazing, which I wanted to go back to, which was, it's not just a battle for sustainability, it's creating real utility. How do you see the next 6-12 months of utility for stablecoins?
It's hard to say. There are some very promising applications on Solana, for instance, Solana Pay. For me, the end goal of stablecoins, it's not going to happen in the next 6 or 12 months. It's about killing the Visa and MasterCard system. Like, it's not sustainable for a merchant for every credit card transaction that 1.5% goes to Visa or to MasterCard. And this is the ultimate utility, like having the settlement layer between banks, between merchants, and for the whole network, the whole financial network, to be done in stablecoins. This will go little by little. Maybe Jeff has more experience than I have in terms of real-world utility, since UST is already used in some cash applications.
Yeah, go for it.
Yeah, so I think the philosophy that I subscribe to is, stablecoins are obviously the killer use case within DeFi, and I think, market cap of stablecoins will continue to grow as DeFi continues to do well. I think the thing that we need to focus on as an industry is onboarding the next, million, 10 million, billion users, and I think a lot of that will come from real-world applications. I'm sure you guys are all at the Avalanche conference, but there's a lot of gaming use cases that are coming online. I think payments use cases are coming online. I think these are kind of the areas that we need to focus on as an industry, or else we're all just going to be shuffling money back and forth from other
Do you want to touch on a few of the relationships you're building at the moment, kind of use cases that you guys are building at Terra?
Yeah.
Maybe there's some stuff you can't talk about, but anything that you feel comfortable talking about.
Yeah, so I think there's a couple of interesting applications that are essentially like Solana Pay type, so making it the kind of on and off ramps between stablecoins and US dollars very simple. I think that's like a very important thing, having it kind of available in all geographies all around the world. I think that's important. So we have partners like QiDAO that are working on a kind of commerce use cases, so people can actually buy things like on Amazon or different merchants with stablecoins. And then, yeah, I think, we have some of the partnerships that we've announced, like the Nationals deal with our community, where, UST will be used as a form of payments within kind of the stadium, right? And I think that's a very interesting use case, and I think we'll continue to see, more examples of this in the real world.
And what kind of features are Curve building out at the moment to increase the use and liquidity of stablecoins?
I mean, what we've seen over the past, like during the DeFi boom, that for a stablecoin to exist, you really need to be on Curve. What's important in terms of liquidity right now, it's the incentive program, as you mentioned. But it's very tough for the stablecoin market. For us, as Curve, we're pushing for any stablecoins to exist, as long as it can be backed stablecoin or fully decentralized algorithmic stablecoin, because obviously it's bringing more volume into Curve, and the goal of Curve is to be, taking percentage of the FX market. If the FX is doing 5 or 6 trillion volume per day, Curve, by, as you mentioned, if DeFi stablecoin will be 80% of the market or 70% of the market, people are saying, then Curve could be the place where you trade all those different stablecoins. But the war is very difficult because as soon as you move the percentage into a pool of multiple different assets, then it incentivizes people to buy those different stablecoins, and then it left out the other stablecoins. So the utility of the stablecoin is very important. Like for example, Luna, Terra. It's like how do you able to buy the stablecoin from KYC or centralized institutions like products, and then how you are able to swap them. But at the end of the day, the wall, like the Curve walls or the DeFi walls, is so important compared to the utility of the asset, because people are incentivized to buy the asset because of the percentage they're earning from it. And now, like if you have 5 or 10% APY or 80% APY for a certain stablecoin, it's very likely that people will move to this stablecoin. But it's very tough to maintain for the long term, as Pablo mentioned, to maintain the sustainability of a certain stablecoin without utility and also without APY at the same time. So if your token attached to the blockchain that you're building is not also going up in value, then it's very tough to compete with other stablecoins in the market. But for us, it's a win.
Of course.
So the more walls, the more stablecoins.
The better for you guys.
Yeah, it's like at the end of the day, we're selling the shovels.
Yeah.
And people are digging.
That's right. That's right. Love the analogy.
Yeah.
Pablo.
I think after, one of the utility features of stablecoins is the cash settled derivatives. They found a regulator issue, very regulator happy, space, but synthetic assets built on the stablecoins generate that use case a lot of the time. So if somebody wants to make a payment on Korean won, they can buy that synthetic asset and then settle it in USD and then back into UST and then into their FTX account. And so they can maintain their exposure to the asset, and you can effectively kind of tape together a strategy for someone to pay someone in Korea or pay someone in Britain. You can just buy up that synthetic asset. It will remain in the same value, and you can use different curve pools, different systems like fixed forex on Ethereum, and you're able to now access the value in, British pounds, but then back into USD and back into British pounds when it goes into your bank account. So there are ways, and I think scaling these up is going to be very viable in the next 6 to 12 months.
And one thing, if I may add, we haven't talked about is the institutional demand for stablecoins.
Yeah, absolutely.
Notably in Europe, in Europe, there are negative interest rates in the Eurozone, meaning if you have a company with more than 1 million at the bank, it depends on what bank you're using, but your bank is going to charge you 0.5%, 50 basis points on a yearly basis. And there is a huge incentive to get Euro stablecoins for institutions. So I think this is, for me, going to drive the growth beyond the incentive program of Euro and non-USD stablecoins with similar situation like in Japan. There are negative interest rates in Japan as well.
That's also to touch on the macroeconomic, problems at the moment. So, how do you see the issues, obviously, that we're well aware of in Europe and everything that's playing out at the moment? How do you see that influencing the stablecoin market?
I think it's going to be great for the decentralized stablecoin market.
Yeah, not for the world.
But for the world as well, because companies will be able to extract more value from the reserves, and ultimately that's more revenue they generate. I think it's going to help the economy grow, but it's a super macro optimistic perspective. I'm not sure it's going to have the impact is going to be that big. The other thing is the macro, what's happening in the world. There is a lot of inflation, and what we're going to see more and more emerge is non-inflation stablecoin, like stablecoins that are stronger than inflation. And this is a whole class of assets. Frax is going to launch one such stablecoin. At Angle, we're thinking of doing similar assets. We won't be the only ones to go on this market, I guess. And having this kind of new assets, it's a consequence. It's a pure consequence of what's happening in the world, and it's an innovation you can only get in DeFi.
Yeah, Pablo, anything to say on how what's happening around the world right now with macro inflation and obviously the war that's broken out? How do you see this affecting the DeFi stablecoin market?
Well, on one hand, I'm a big fan of FPI. So you were mentioning about the price index, because now you can buy a token, follows things, but not necessarily you're buying crypto, which is a nice diversification. But in terms of macro, I think we're basically doing Venmo or PayPal 2.0. Now it's not centralized, so PayPal won't decide one day, oh, you were getting 20K because you're doing an event, we won't let you have your money. That's happened countless of times for people that I worked with through PayPal. And so this will just offer much more unfettered just economic activity. So you can just pay someone $1, pay 2 cents, pick your chain, do your thing. And I think the macro effect of that is just insane. We're only seeing the tip of the iceberg with all these funds that are USD based, so USDC based. They'll just send me your address, I'll send you your USD, and you're invested. No questions asked, no bank account details, no nothing. I think that type of activity is just going to slowly translate with the point of sale systems and others, and it's going to be, it's wild right now, but it's going to be even wilder in the next 3 to 5 years. We're talking to some people that do payment processing in India and South America, and this is all they want to do. They want to integrate stablecoins into the point of sale systems. They want to figure out how to add maybe QR codes into the older style credit card readers. And no, it's not a question of if, but like when.
Yeah, very interesting. Man.
And so finding ways to kind of access the local currency without actually accessing the local currency, you are able to now still trade on stable coins, but maybe there's a stable coin that not a lot of people use, so you can't necessarily buy it, but you can create it through a system of lending and cash settled derivatives, and suddenly now you have access to that whole market. So there's a lot of stuff coming out.
Super interesting. Jeff, you've probably got with UST the largest level of institutional involvement at this space. What do you see as some of the more serious risks in the next 2+ year horizon for stablecoins in particular?
Yeah, so I think like the most important event to happen in kind of like the last 50 years in kind of global financial markets was, because of the war, the US and your EU cutting Russia off from the SWIFT system. I think when that happened, people realized that you're either with the US and their allies or you're not, right? And I think now people are starting to understand that the existing financial infrastructure can be censored in a way that people never thought would ever happen. And so I think going back to like DeFi and stable coins, I think for a long time, like people always said, like, USDC, USDT, it's important. They serve kind of important roles in the kind of infrastructure of DeFi. But the fact that these are controlled by companies, I think, is a really bad thing. And I don't think it's good for like a large percentage of stablecoin issuance to be on centralized stablecoins. So like before this year, MakerDAO was really kind of the only player in the space with something like 1% market share. I think over the last year, we've seen decentralized stablecoins take something like 15% market share, and I think that trend will only continue to increase. And so with institutions, it's like hard to know. I think a lot of them are still only going to be comfortable using like a USDC. But I think for a lot of kind of like DeFi native users, people are starting to realize that like, hey, this is actually a very serious thing that can happen. With the cutting off of Russia, not only does it affect countries that are not aligned with the US, but look at like all of the people in Russia that don't necessarily agree with the government and kind of what they're doing. But, like a large percentage of, Russian, like the currency transactions are with remittances, right? So like there's all these people that live kind of outside of Russia that now like don't get access to any type of like financial services and money. And so I think that shift towards like more decentralized money, I think is something that's really important, and I think will start to happen in a very meaningful way. I don't know when institutions will adopt, but I think on the retail side, it's starting to happen.
Yeah, definitely. Like you said, it's a matter of when, not if.
Yeah, if I can add something, I'm not probably like advocate in the sense I'm not sure if actually going to bring more stability because of decentralization of access to money. I mean, we've seen it in the curve wars or DeFi wars. It's not because you have decentralization that it actually bring more chaos most of the time in DeFi space. So, I mean, what's happening with the war in Russia and it's also like about stopping some certain behaviors at the end of the day. And if you don't have those mechanisms that you can either censor or incentivize people to not do such things, then at the end of the day, it's like bringing more instability to the world.
Yeah.
And so obviously for people in the country, what's being censored is very bad, but at the end of the day, what you're trying to censor is the country because the country is doing something bad. So we haven't touched base on this, but the market of stablecoin with China, the yen coming, and other countries building their own stablecoin, I really doubt that they will let decentralized stablecoins continue what they're doing currently, offering high yield, because by letting people doing their decentralized stablecoin is basically killing their own economy. So China said, we censor people from accessing crypto, but we let people from having access to our digital coin. And then if you want to buy or purchase anything in the world, then you use our coin. And it will be the same with Europe, it will be the same with US. US is already like pretty advanced on the game. We don't actually realize, but as European, we never had access to so much like US dollars in our pocket. And the thing that was created by Veyrat, who's seen Opium Diaries, the video? I think it's really realizing it's really coming. Like big players, they want to have access to stablecoin. And startups or anyone that building their own stablecoin, they will try to tell them, okay, listen, you cannot continue what you're doing because obviously we need our people from the country to buy our stablecoin, purchase any goods with our stablecoins. And this is like a massive war coming that the world never seen before, like with the creation of money, monetary system. Because monetary system, the US still control the economy worldwide because, as you mentioned, they can censor, they can tell someone, okay, if you don't do what we ask you to do, then you cannot access the market. But at the end of the day, it's also like not saying the US is good or the US is bad, but it's also like need worldwide stability. And if you remove the piece where you can censor, you can incentivize someone to not do some such things, then you really enter chaos.
Yeah.
So I don't think it's like a super.
No, it's good.
What we're building is exciting, but it's also like super scary and dangerous.
Yeah, it is. It's cutting edge, and we have to be honest about that. Absolutely. Yeah. So, being sort of the devil's advocate, how do you see 5 years plus stablecoin market?
Yeah, I think like this was a nice game. but with big players coming into the game, like China, they're saying like this year they will have the yen currency. US is pretty advanced with Gemini, Coinbase, like USDT, USDC, and all different things. So that's the reason why I'm also like big supporter of Euro initiative, like Angle Protocol, because we need a big player in Europe. We need like a big, states playing against each other, and that will be in 5 years' time. I think the market will be very different. Like regulation will go against people building decentralizations around stablecoins, and the population will be incentivized to have access to the nation-state currency, to institutions, and making it super easy.
It's going to be interesting. Next few years will be very interesting. Guys, we'll open up to a few questions. Thanks to the guest. Anyone in the crowd? We'll probably take questions for about 10 minutes, 15 minutes. Anything that wants to be asked. Now's your time. We'll get a mic. We'll get a mic set out to whoever's got any questions.
In the meantime, if I may, on national currencies, I think there are some equations which haven't been solved, at least in Europe. Because the way the monetary system works is that banks are the ones really issuing money. And if you have a central bank that is issuing the stablecoin, it means that everyone would have his own account to at the central bank, meaning that it would remove the role of banks. And since the role of the central bank is the economic stability, and the economic stability relies on bank, there is like a contradiction, which I know the European Bank, they haven't found a solution to it, like how to include banks in the issuance of decentralized stablecoins.
That's the thing, European banks, maybe at the end of the day, they might take ownership in Angle Protocol. Because it's serving the people at the end. I think like those stablecoin, like for example, Terra and all the same things, if they play in a regulatory framework of the country they operate mostly, they will be very friendly for their governments to actually accelerate the adoptions of those different stablecoins. That's what we've seen in the US. US now, they were against stablecoins, against crypto being a scam and all different things. But now they're actually pushing for adoptions of like
that's
USDC
thanks to the lobbies. We got a lot of lobbying done.
Yes, a lot of lobbying. So it will be the same if you really play, like for example, Angle Protocol or QiDAO, like all the like Terra in Asia, like mostly. If they really play the rules of the state, they will be incentivized by the state to continue, and then a lot of money will flow into it, I think, because it will be the only way for those countries to compete on a macroeconomy.
Agreed. Guys, questions? Anyone in the group? At the back? Have you got the mic? I think we've got a mic ready. 1 second, man.
Okay, perfect. Thank you very much. So how do you think, for instance, the euro has a specific monetary policy, you need, like you mentioned, where the interest rates are negative, right? So if you put collateral in a banking account like USDC is doing, that might be a problem, right, for some stable coin.
So it doesn't scale. A euro stablecoin, a centralized euro stablecoin doesn't scale. What you need is the ability to invest the euro you have in reserves in something that is stronger than what your bank is taking, so invest in the money markets. But if you invest in the money markets, you are taking a systemic risk, because if there is a huge market crash, then you're losing money and your stablecoin gets under-collateralized. No one has found a solution yet, and regulators won't let you invest in money markets. So the euro stablecoin market looks pretty doomed at the moment, especially when regulatory instances don't really understand. They wanted to ban proof of work 2 weeks ago, and so they managed to change the vote, but centralized euro stablecoin, the state looks bad. And you need regulation and macro to evolve at this point.
Because indeed that means that you can only work with a collateralized stablecoin in Europe until that situation changes, which I think is indeed a big disadvantage.
So it's good for us as a decentralized project, but the problem with most decentralized stablecoins is that it's harder to get a cheap on and off ramp. And this is the key to the war. Like if you have a free on and off ramp, you can be used in real life applications. I think Terra, they are far further ahead than we are in terms of on and off ramp with low fees. And if you gain the battle for on and off ramp, you gain everything. But as a decentralized project, you know, there are often barriers. You have to take some fees, or which make it hard to get one stablecoin for like 1 AG euro for just €1. So that's what for me is going to prevent the growth of euro stablecoins, decentralized euro stablecoins.
Okay, great. I had a second question. It's about collateralization in general. So I think places like USDC, they lock up the collateral inside a bank account, or that happens quite often, or it's some sort of money market. You know, how is that risk? Because obviously there is also a risk. Like normally bank accounts are covered maybe up until €100,000. What happens if there is a banking crash and the collateral inside of a bank?
Financial market never crash, right?
Right. So yeah. No, but
so are you talking about the risk of having USDC in reserves, like a centralized?
Fully collateralized and then something happening.
I mean, there is a systemic risk with USDC. Even if you are fully decentralized, you still have some exposure to USDC.
Yeah.
Like Olympus, they like to say they're fully decentralized because they only own decentralized asset. But DAI has a lot of USDC in reserves, and to some extent, everyone is exposed to USDC. Yeah. So even if you put several layers between like the collateral and the bank and your protocol, in the end, everything could crash in like a day. So yeah, I'd rather have nothing bad happen to USDC.
Yeah, but
Right.
even if something,
Or USDT, or
That's right.
I mean, in general, if something bad happens with the stable coins, it's all part of your stablecoin strategy to have a diverse group of collaterals. So, for example, for us, yeah, we have a little bit of curve pool tokens that the users who are borrowing against that are exposed to that the risk. So the protocol doesn't necessarily take that risk directly, but the users who are borrowing money against that do. So in a way, as long as we keep that as small amount in comparison to all the other collaterals, we can maintain the peg and be safe from one of the many different systemic risks that there are out there. You know,
it's an interesting thought indeed that other types of collateral could protect better, you know, than actually holding the currency itself in a bank account or something like that. But you know, maybe down the line, regulators, that's probably a good topic. If regulators could also maybe cover whatever is inside of the stablecoin reserves.
yeah,
of a stablecoin
as long as
issuer.
they stay just with a banking account, but they don't go into the crypto area, I think will be great.
it's funny, I think, because like most of those assets that are added as collateral are also backed by US dollars. So at the end of the day, if there is a crash, except if you add real assets, like maybe real estate, bonds, debts, all different things make sense. But if you add ETH or BTC as collateral, it's nice in a message you're trying to, like, as a decentralization. But if the market or USD or like there's a systematic like USDC collapse, ETH and BTC will also like collapse, probably, like very likely. So I think like when moving like project like Centrifuge or project like that, real assets moving into as collateral to those different stablecoins makes a lot of sense.
How is Terra trying to handle that?
The biggest thing that we're doing is adding exogenous collateral, so BTC, because we believe that Bitcoin is the most sound money in crypto right now. I think the foundation is open to and exploring other types of assets to be used, but right now it's just Bitcoin.
Okay, cool. Now, good question. Anyone else? Yeah, it's coming.
Yeah, thanks a lot. So earlier on, you touched on how to influence certain behaviors on like a global scale, right? But if we look into DeFi, already there are some behaviors which can be considered net positive for the system and net negative, but it all depends on what tribe you belong to, right? So for instance, Curve, right now, Curve emissions are dominated by a few different protocols which are fighting, which is called the Curve Wars. So how do you incentivize something as a protocol like Curve, something that's better for the Curve ecosystem as against, you know, Frax, for instance, taking 25% of the emissions and controlling or extracting rather the rewards that are generated? how do you incentivize or disincentivize behaviors which are better for the protocol as against the wider ecosystem of all of the protocols using Curve?
Yeah, I think it's a good question, and I believe this is also a big risk for DeFi and decentralization in general. It's like giving too much power to the community rather than the core group or the one building the protocol. And it's something like Michael, founder of Curve, have been thinking a lot as well. Is because I think Curve is probably one of the most decentralized project in the ecosystem. But the problem is like when you have other players that are starting to build on your protocol and then they acquire a lot of power at some point because they're making a lot of money and money change people, and also the holders of the tokens behind those projects, they're not necessarily incentivized to continue providing value to the project because they might actually shift the value to another project because now the project is making them money, but not so much if they, instead of just going to someone else. So it's a big problem. And there was a change in Curve lately about the voting power, about, for example, on Convex, if 100% of, like 50% of people voting to Convex didn't have the much, it's the same as saying we want all of them voting, but not, Convex cannot vote by 100% of their voting power for yes or no if their community is not voting on the protocol. So it's like, well, it's kind of like democratic voting, but inception democratic voting. So until the end, you want the entire community to vote. But I think, yes, it's a massive issue, and it's dangerous. I think Vitalik was talking about this, is like as a DAO, as a project that you're building you're building a decentralized organization, but you want at the beginning to be very centralized because you want to drive the vision of the project, and then you slowly but surely decentralize each piece of the protocol. I think that's what we've seen with Maker. Maker was the first stablecoin on the market, fully decentralized. But if you look at Maker today, they're not capturing much of the innovations and they're not building anymore because you have too many people that have different incentives, different visions, and they cannot coordinate each other. That's why I was coming back to macroeconomy. It's difficult to think of a world where you have decentralization of monetary system, but each of those players have also their own incentives. That's the reason why then you can have a lot of chaos rather than having a worldwide centralization of as a human, as a community, as a earth, where do we go all together rather than having like a few different people fighting each other. Yeah. And DeFi is already a representation of this.
It's a human issue.
Yeah.
It's a human issue for sure.
Just sorry to continue on to that. So, for example, like you mentioned Maker and then Rune as Convex. I mean, you guys have recently adopted like VE tokenomics. How are you thinking about someone, spinning up another DAO and taking the beautiful creation of convex flywheels and, just building on top and adding to your own protocol, but ultimately also extracting away some power and some of your agency as a protocol to deliver your objectives?
I think that is great. I think the future backholders won't be institutions most of the time. It will be other DAOs. They'll be looking to take control of A, B, or C protocols, and basically their product is going to be using those three protocols to create the new user experience, whether it be Curve, whether it be a stablecoin, whether it be Liquidity, which are the top of the trilemma, the big thing that people look at stablecoins, but then it might be a marketplace or an NFT thing or some sort of promotion. So I welcome new protocols coming in and doing that, as long as protocols understand that there's a need for at least a veto type of power. Solidly, for example, recently launched great protocol in paper. Great idea. You give rewards to the people that are voting towards those rewards, and then the fees are earned by the people who voted on the rewards. Great in paper, but then you don't have veto power as a protocol, and the people can do evil things like give themselves rewards to tokens that only they own. Not only they keep all the rewards. If they had some sort of multi-sig to veto that, they would have saved themselves. But because they went to the full decentralization immediately from the very get-go, you didn't have the ability to at least protect yourself from something that you didn't realize. So the unknown.
So how are you guys handling that?
So we're handling it through what we were joking, or I was jokingly calling it reverse onion, where we start with the core and we kind of layer the contract. So at the beginning, we may have a little bit more power than a fully decentralized protocol might or should have. But then we cover it with another contract that will basically only let you do A, B, or C functions. And then we know, okay, so only those functions are callable. And then later, okay, what are the limits between those functions? But until we know those things, we don't do it. And so we layer it through multi-sig, have like at least 3 to 5 people signing messages. And yeah, so reverse onion.
Well, I love that analogy, by the way. I love the reverse onion analogy. I was saying that to you before. That's amazing.
But it's it's funny like how the space we all doing decentralization, trying to make the world and the society better. But now, like because of DeFi walls and curve walls and different things, now we are incentivized to add pieces of bad behaviors into projects. Otherwise, the project don't go anywhere. It's very funny how like we criticize the world of like big lobbies, for example, European Commission, Parliament, and also US, Asia, like big lobbying. But at the end of the day, in DeFi, you have a single person can hold massive power in the entire DeFi, and can do like we've seen it, like stories. And yeah, it's interesting. Like we're trying to solve problems, but we're actually creating more problems. Looks like. But
I think
at
we
the
try
same
to solve
time,
problems too fast.
yeah, but at the end of the day, if like you have more people accessing, it's more transparent, giving access to like people access to those different features worldwide. It's not building a perfect world, but it's making the world better, but not perfect.
I don't think it'll ever be perfect. Though. That's the reality. I think we're chaotic by nature. So, but as long as we're practicing, we're getting a little bit better each time. That's the vision, right? Was there another question? No. Was that another question? You good?
No, all good.
So, wow. I'll try to. My question is basically about the future and your overall like vision, because so I've been thinking like from the very inception of stablecoins, how everything started. It was all about having. Being able to rely on another currency that's not issued by a central authority, that's more stable than your national currency. And we can see that a lot in Latin America, countries like Venezuela and Argentina and like Brazil and so on, where even where I was born, when I was born, the inflation was like 39%. So we can see a lot of great use cases over there. But in the rest of the world, we can just see a lot of different projects and also banks entering the space, trying to compete for a piece of the pie, to be honest. So we have like different, we have fiat-backed stablecoins, we have algorithmic, and then hybrid stablecoins, and then CBDCs suddenly come into the picture. There's like Europe and Asia trying to issue CBDCs. But if we think back to like, what is the main point of having stable coins? Like at the beginning, you couldn't earn yield. Nowadays, we can, right? So what is the main point of that is to give power back to the people who, are highly affected by their local economies. So as I said, for example, so that's why I have been thinking like, okay, but now we have a big market competition going on with all these different projects, there's cross-chain projects, there's like MakerDAO that's only Ethereum and so on, and CBDCs again. So what is like your prophecy in terms of where do you see? Because I personally don't see with the current market competition going on, I do not see a regular person holding 5-6 different stable coins in their account. If we want to go mainstream, like there has to be another type of, solution. So, like, what is your prophecy?
I think thanks to protocols like Curve, more and more like holding one DAI is going to be similar to holding one UST, and that eventually FTX already does that. Like for FTX, one USDC is the same as one USDT, and eventually all that are solidly built are going to be considered the same. That's my take on this.
It's a little bit like M-stable, but
My DAO is not.
yeah. Or and it's like staked out, like things like where you can. I've onboarded a bunch of random people that wanna hold stables and wanna get interest. You just go to StakeDAO, you drop in DAI, USDT, or USDC. You're earning 10, 15% depending on what chain you pick. Usually if you go like Harmony, you know, not a lot of people are there, so you can get a higher reward on your stables. And I think there's people that just want to drop it in, forget about it, because they don't want to keep track of what's the latest on MIM, you know, who hates Sifu now, or what's going on with X token, you know. So they just want to drop it into like a curve pool, which is just doing wonders for people, because now you can just drop it in, earn your rewards, and usually auto compound it with something like StakeDAO, and then borrow against it with MAI. And so there's a lot of cool stuff that you can do, but it basically makes it super fungible. So you don't worry if you're holding DAI, USDT, or USDC, you're just dropping it into the pool. And then when you need it, you can use it.
I mean, right now, if you want to go like mainstream, I don't think people will even think about stablecoin. People just use an app, use like Revolut, like any applications, and then the application will use a stablecoin. But yourself, you just see like dollars, euro, and something denominative, and that's it. I mean, you don't. And if you look in Curve, it's already the case. You have the three pool. You have like Meta stablecoin, which is basically a basket of multiple different coins, stablecoins, and then it's more stable because you have way more of those stablecoins with different types of mechanism behind it, algorithmic stablecoin, hybrid, and all different things. But as a user, right now, we all believe that the next conference, people will be like, oh, what's the next, like, the token, like. But at some point, those conferences will be just about the project, the utility, and what you can do with those projects. And then behind the hood, you will just, the project will use a certain stablecoin or roots or bridge or like a blockchain because it's faster, because it's private, because it's all the different things. But you will never see, as a retail standpoint, which stablecoin you're using behind the thing, I guess.
Yeah, I agree with that. I mean, just to add, like, I think we'll see a world where it'll be application-specific stablecoins. So you can already see that, like, for Terra, to access Anchor, you need UST, right? And then on the UI for like a normie-facing person, like they have no idea that they're actually interacting with the UST. It just says USD, right?
That's right.
And then Curve and a lot of these protocols will act as kind of like the piping behind. And if a user wants to swap between like UST to or USDs to euros, it'll swap through Curve via whatever the most efficient mechanism is, or most efficient pool. But I don't think like millions of people are going to be onboarded to DeFi and like actually like look at the Curve UI.
We need to make it more simple.
Yeah, exactly.
Yeah, not more complex.
No, I mean it's not more simple. It's like any innovation phase. Those things that we're talking about are protocols. But the internet that we're using today, we never talk about protocols. When you say, I'm using TikTok, have you ever heard about someone saying, oh, which kind of protocols is TikTok using?
Yeah, I'm using HTTPS with MySQL.
People don't care. They're like, I use TikTok all day, but they don't really know the protocols behind it. Here, like, because we missed already 10 years, but it's really like the early days of this technology. So we all into it. And buying tokens and swapping, Uniswap, like Curve, like all those different protocols. But at the end, people like in maybe a couple of years, people won't care about this. The product, the thing they're using will use those protocols, but user will never see those protocols being used.
So what kind of apps do we need in the future? Just apps that abstract all of that completely?
Yeah.
Like, in a way where we just see USD, we just see AUD, we just see.
No, I mean, like today, like you buy a burrito, but you don't really think about the money.
That's right.
By buying the burrito, you just use your card and you buy it and you eat it. So that's the point. Like those applications on your phone that you use every day or the web you're surfing, you'll have integrated wallets, maybe on iPhone, Apple. We discussed it like a few days ago. And you will use them without knowing that you have your private key stored inside the enclave of your phone, and you'll be purchasing stuff, and then the routes will be automatic.
Okay, so to answer the question, do you believe that there'll be enough room in the space for multiple stablecoins in the future?
Yeah, because multiple stablecoins will have different use cases. Like, for example, because of KYC, because of AML, because of the place you live in. For example, Latin America, like serving a different purpose, different rates, different lending market. You still have companies building. We said that banks might disappear, but not really. Like they will probably like build different use cases, but bank won't be used to store your money. Bank will be used to provide services. That was the original idea about banks. Like they store value, but at the end they have to provide you a service, because the main service of the bank, you have a safe to store value, but the bank should be also serving you products. So they will be all the same things.
Did that answer the question? Anyone else? Okay. If there's no one else, is there anything else? Oh, sorry, mate. Over here.
Get this man a mic.
Thank you. So a few years ago, Facebook was planning to launch Libra. Then this project was killed by US government. Yes, now it exists again, but the idea when they were just launching, not like they're launching today, but when they were just launching, was that the organization capable to issue the largest stable coin of the world is not a bank, but it's the one who has access to the users. And this situation hasn't changed. So do you believe that the next stable coin would be issued by some organization like that has access to the user? I don't know who will it be, but let's say some other highly usage company. Will there be a new version of, should we expect a new version of Libra? Not Libra, but okay.
Yeah, equivalent, yeah.
Equivalent, yeah. Or we should not expect it. Maybe that time has passed yet.
Great question, guys.
So I think the point of stablecoins is composability, the fact that you're building something that others have interest to use. And if you think of a company, even like a big retail company like Walmart making its own stablecoin, from what I believe, but I may be wrong on that, their interest would be to have this stablecoin like be not compatible, be not composable with other companies. Like it's not their incentive to build the infrastructure to be used by their competitors. So since my belief is that such stablecoins won't be composable, it won't really be stablecoins, and it would be just another payment system. I may be wrong on that, but I don't think we would see like Venmo. Like Venmo, technically it's a stablecoin, but it's not composable. No one can build on top of it. But it's still, you give $1 and you can send it in an easier way than just using your bank. So other companies will be making their stablecoins, but it won't really be stablecoins.
I like the idea of stablecoins by companies. I think that, they could have worked, but unless you're an incumbent, it's going to be very difficult because you're going to be risking your entire product line for launching a stablecoin, which lets you do a money market fund or whatever, like Starbucks, 0% loans from your users. If you're Facebook and you already have access to the eyeballs and you launch a stablecoin, you're risking your entire company just so you can launch a stablecoin. It could be worth it because, Facebook has a ton of money offshore. They could pump it into the system. Now they have stablecoins. They didn't really have to bring it into the country, so they don't pay taxes. Now, that is a great proposition for them, but again, they could potentially destroy the entirety of Facebook or Meta or Instagram, etc. So partnering is going to be probably the move, more or less for a regulator, a shield, so that there's another stablecoin out there. You're partnering with them. You're helping them grow. You're not necessarily
exposed.
Exposing yourself to regulators like that.
I truly believe that the reason why Facebook and Libra crashed is not because they wanted to build a stablecoin. It's because Facebook positioned himself above all the countries in the world by having a place where you don't actually care about countries anymore, or like lobbying and power of different governance across the world, but you build. And I believe, I'm not in Facebook or whatever, but I believe that's what they've been spending time with. Because of the failure of Libra with Meta. Imagine having a metaverse where the economy inside and being able to purchase things is not actually fully correlated to the US dollars or whatever, but to your own money. Well, right now what we're saying is like, maybe they will do something like that later and the money will be called Meta, I'm not sure. But the thing is like, they position themselves above the monetary system above all the countries in the world. And obviously this is like fucking scary. And that's the reason why everyone wants against them. Because at the end, you have people worldwide could communicate between each other, could lend money, could borrow money, could have access to different things worldwide without borders. And that's why it's like scared everyone.
Put a big target on their back for sure.
Yeah, it's like they become the one country having control of the entire
every
world.
other country, yeah. Did that answer your question? Yeah? Anyone else? I think we'll leave it at that if no one else has a question. Thanks for joining us, guys. Thanks to our panelists. Thanks for everyone for the discussion. It's been great. Feel free to stick around after this. Have a bit of a chat, have a bit of a network. Feel free to check us out at StakeDAO, by all means. Bit of a selfish plug. We've Liquidity just launched Liquid Lockers. Check them out. We have got an amazing deal happening now with Angle and many more to come. QiDAO, Curve, Terra, thank you so much, guys.